Imagine waking up tomorrow morning, grabbing your phone, and seeing cold, hard cash sitting in your brokerage account. You didn't commute for it, you didn't clock in, you didn't answer a single email, and you absolutely didn't trade your precious hours for that money. Most of us have been wired from day one to believe that income literally only comes from a paycheck. But there's this growing group of investors who are experiencing something completely different. They're waking up to hundreds, sometimes thousands of dollars a month, just hitting their accounts automatically. Welcome to this explainer on the Dividend Blueprint. Today, we're going to look at exactly how the smartest investors build an income machine for life.
Okay, let's dive right into this, because I know exactly what you might be thinking. You're probably saying, wait a minute, people really get paid just for owning stocks? Yes, they absolutely do. And we aren't talking about luck here. We aren't talking about catching the latest meme stock wave. And we certainly aren't talking about risky, stressful day trading. While social media is out there frantically chasing flashy startup stories and, viral overnight riches, the smartest investors in the country are quietly relying on one of the oldest, most overlooked wealth-building strategies out there: dividend investing. Family offices respect it, institutional investors rely on it, and retirees depend on it. It's just an incredibly reliable, steady strategy to create income that simply does not depend on your time.
For a lot of disciplined investors, the ultimate goal comes down to one specific number: $10,000. Let that number sink in for a second. Imagine generating 10 grand a month in pure passive income. To put that into perspective, earning that much every single month from dividends sounds almost unreal to the average worker, right? It sounds like something reserved exclusively for billionaires, but it is an absolutely real mathematical milestone. It's the exact milestone that financially disciplined Americans use to lock in their ultimate financial freedom.
So to understand how we actually get there, we need to understand the mechanics. The absolute foundation is understanding what a dividend really is. At its core, a dividend is simply a payment made by a company to its shareholders, distributing a portion of its profits. When you buy shares of certain established companies, you aren't just crossing your fingers and hoping the stock price goes up someday. You actually receive a direct slice of the company's profits, usually paid out quarterly and sometimes even monthly. Just think about the strongest, massive billion-dollar companies in America, the ones making the everyday products sitting in your pantry right now, or the ones powering the smartphone in your hand. They generate massive cash flow year after year, and a lot of them choose to reward their shareholders with these incredibly consistent payments. Okay, now we need to do a quick mathematical reality check. To produce roughly $120,000 per year, which breaks down to that $10,000 per month average, an investor needs a portfolio designed to generate about a 4% annual dividend yield. Mathematically speaking, that requires a portfolio of around $3 million. I'm going to pause right here for a second. $3 million. For a lot of people, seeing that number creates an immediate sense of tension. It sounds totally impossible. It sounds like you'd literally need to win the lottery to ever see that kind of money in your lifetime. Listen, if that number makes you feel like you're already way too late to the game, I want you to take a breath. Seriously, you are not late. You can absolutely still build this. Smart investors don't look at that giant $3 million finish line first. They look at the process. And that process starts incredibly small, just laying down one building block at a time. It begins with automatic monthly contributions into a brokerage account. It comes from making the choice to redirect your lifestyle spending into dividend-focused ETFs. It means maxing out a Roth IRA, getting that 401k match, aggressively tackling high-interest debt, and bringing up that credit score. What looks like overnight financial freedom to an outsider is actually just the result of years of quiet, highly accessible discipline. And as you put those fundamental blocks in place, something pretty incredible happens. Your money actually starts working for you. I'm telling you, the very first time you receive a dividend payment, something deeply psychological shifts in your brain. It might just be $10, it might be 50, but suddenly it clicks. Your money isn't just sitting idle in a checking account slowly losing value to inflation. It's out there producing. It's generating cash flow whether you're sitting at your desk, sleeping, traveling, or just having dinner with your family. This is the exact moment that permanently changes how people think about money. This quiet discipline eventually builds into what we call the snowball effect. This is the compounding loop that makes the whole entire system work. It goes like this. Step 1, you earn a dividend payment. Step 2, you reinvest that exact payment to buy more shares of that company or ETF. Step 3, well, because you now own more shares, your very next dividend payment is even larger. And then, you guessed it, you reinvest that larger payment to buy even more shares. You're basically taking a tiny little snowball at the top of a hill and rolling it into a massive, unstoppable income machine by the time it reaches the bottom. Let's actually map out how this plays out over a lifetime. Imagine starting in your late 20s, just consistently investing in dividend-paying ETFs.
Then moving into your 30s, you meticulously reinvest all those distributions and actually increase your contributions every single time you get a raise at work. As you hit your 40s, you're avoiding unnecessary consumer debt, keeping your credit utilization healthy, and focusing strictly on long-term cash flow instead of whatever short-term hype is on the news. By the time you reach your 50s, you don't just have a standard retirement portfolio, you possess a massive income machine. Consistent wealth building over decades makes passive income feel not just possible, but honestly completely inevitable.
So, what really separates the average investor from the true wealth builder? Well, the average investor is constantly chasing market hype, trying to perfectly time the next big cryptocurrency pop. And if they actually do happen to get a dividend, they immediately spend it. The smart investor, they just tune out all that noise. They focus entirely on solid business fundamentals, and they have the absolute, unwavering discipline to reinvest their dividends, just letting compound growth do all the heavy lifting for them over the decades. But we need to be really clear here as we're talking through this. Not all dividend investments are created equal. Chasing the highest possible yield you can find can actually be incredibly dangerous. A stock paying an 8 or 10% yield might look like a total gold mine on paper, but if the underlying company's fundamentals are weak, that income is going to vanish. Smart investors carefully analyze the mechanics. They look at payout ratios, earnings stability, free cash flow, and debt levels. They are searching for established blue-chip companies with long, proven track records of dividend growth history, the kind of companies that have shown the real financial resilience to actually increase their payouts right through recessions and inflation cycles. Because at the end of the day, a sustainable dividend is always infinitely more valuable than a flashy one. And here is an absolutely critical piece of the puzzle that so many beginners completely miss: taxes. Financially successful investors don't just look at their raw returns, they think heavily about their after-tax income. Depending on how your accounts are structured, dividend income can be taxed very differently. For instance, qualified dividends often receive highly favorable tax treatment compared to what gets taken out of your ordinary paycheck. Utilizing structures like Roth IRAs can actually create tax-free compound growth under the right conditions, while your traditional retirement accounts and trust structures work to optimize your long-term income efficiency. So why do we care so much about all these boring tax strategies and business fundamentals? Because of what this income actually buys you. It buys freedom. Dividend income creates flexibility. It creates real choices. It can cover your mortgage payment or handle your healthcare costs. It can fund your travel goals. It gives you the immediate, undeniable confidence to walk away from a toxic job without panicking about how you'll pay the bills. It supports early retirement, allowing parents to actually spend time with their family instead of perpetually chasing overtime shifts. True financial freedom is rarely about buying private jets or flashy sports cars. It is ultimately about having the total freedom of owning your own time. Getting to that point requires a pretty profound shift in how you view the world. That portfolio paying 10 grand a month doesn't magically begin with millions of dollars. It begins with a mindset. You have to value ownership over consumption. You have to value assets over liabilities. You need patience over excitement, and you definitely need systems over emotions. While everyone else out there spends years agonizing over the next hot stock tip, true wealth builders just quietly accumulate income-producing assets one single share at a time. As we wrap up this explainer, I want to leave you with this final thought to chew on. The goal isn't just to make money. The goal is to build money that keeps paying you long after you stop working. In a world where inflation rises, jobs inevitably change, and economic uncertainty is just a normal part of life, income-producing assets are truly your most powerful form of financial security. You can absolutely build this. The only question is, if you don't start redirecting your money into assets that pay you today, how many more years are you willing to trade your precious time for a paycheck? Thank you so much for learning with me today. Keep building, stay disciplined, and let your money work for you.